In this video, you're going to learn when I think Tesla is going to $1,000, and it's not what you think. It's way better. In this video, I'm going to discuss this prescription from the stock doc. It says Tesla stock. I'm going to explain my $1,000 price target for Tesla stock. And no, I'm not going to get on the knees of all of the Tesla fanboys on Twitter who just want to hear that Elon Musk is God. I have great respect for Elon Musk. I think he's a fantastic visionary. I'm going to be crystal clear up front. I do not believe he should be the CEO. I believe he should be a visionary. I believe he should be an inspiration. I believe he should be involved in product development. I don't believe he is the best for business branding at Tesla. But in this video, we are going to discuss the valuation of Tesla. So let's get started with Goldman Sachs' take. Goldman Sachs begins by contextualizing Tesla's artificial intelligence and full self-driving opportunities. I'd like to be very clear here in saying I 100% agree with Goldman Sachs that Tesla is well positioned to be the leader in AI technologies. In fact, I would argue they are the leader in AI technology. They are the largest position in the ETF that I actively manage for a reason. I believe this stock has incredible upside. Now, I could be wrong, and I want to be clear, this video is not personalized financial advice. It's not a research report for you. These are my opinions. And they're going to come with a set of biases. You need to be aware of that. But let's talk artificial intelligence for a moment and how you can hedge artificial intelligence's upside, especially when it comes to full self-driving. First, I want you to consider this. Elon Musk just installed over 10,000 H100 NVIDIA chips. This is to say that even though Tesla is building out Dojo supercomputers, the value of a Dojo supercomputer is not yet there to the level of what an H100 off-the-shelf chip could do for artificial intelligence as quickly as Tesla needs it for Tesla. This means that as Tesla's self-driving improves, you actually see more support for NVIDIA chips. But in addition to that, your competition, like a NIO, which frequently on social media is seen as driving effortlessly through roads and highways without any driver intervention, NVIDIA is the basis for the ADAS technology supporting companies like NIO in their quest to get to full self-driving. But what's the difference? NIO's vehicles use 33 different sensors to help the car understand where it is on predetermined mapped roads. Tesla uses vision-based artificial intelligence with nominal intervention. I would argue that maybe I have to intervene in my drives about 4% of the time. The vast majority of the driving that I do today is on full self-driving, and it's almost as if I'm not even driving anymore. It is phenomenal. At some point in the future, every single person will enjoy the benefit and the luxury that is full self-driving. It is like getting your driving life back and being able to do things or have a conversation or focus on what you want while you drive. It is fantastic. It's not to say you don't need to supervise the car, much like a pilot on autopilot flying a plane. You just supervise the plane. But that doesn't mean you have to stare out the window every waking second. Now, what does this mean for Tesla? Well, Goldman Sachs has an opinion. Goldman Sachs believes that Tesla is a leader in AI, and eventually Tesla may have their own fleets, and that they face a high degree of competition with companies like NVIDIA, which I actually think is actually fantastic for NVIDIA. I think you can hedge your Tesla position with NVIDIA, because as Tesla succeeds, they buy more NVIDIA. As Tesla succeeds, competitors buy more NVIDIA. If the competitors succeed, then they're buying more NVIDIA for their success, right? So it's an interesting hedge, even though they're very similar. It's not like, the best hedge for being long Tesla is a short on Tesla. That is a clear one-to-one hedge. But I think of sort of a survivor's hedging POV, I generally don't think you survive long-term constantly being short, but being long on both of them is a very interesting play. Because one will explode, whereas the other will also benefit from that, and vice versa. I think the benefit of NVIDIA is the benefit of Tesla. The benefit of Tesla is the benefit of NVIDIA. I think they're complements probably is a better way to put it more than hedges. But ignoring the NVIDIA argument, it's worth considering that Goldman Sachs believes that some of the best sources of revenue for Tesla going forward are going to be FSD licensing or providing Dojo as a service. And this is where I actually start to diverge a little bit from Goldman Sachs' opinion and their $235 price target. Goldman Sachs believes that FSD could be worth between $50 to $100 billion a year of revenue, and the total addressable market here is over $1 trillion. And this is with near-term upside catalysts as well, such as the new product launches, Model 3 Highland, and the Cybertruck. Keep in mind that Goldman Sachs aptly suggests we're probably going to have a vehicle replacement rate of over 1 billion vehicles, or replacement count of over 1 billion vehicles. Consider this. Right here, we have the overall autonomous or automotive and services industry TAM in the long term could be over $1 trillion annually, to the extent that the global installed base of more than 1 billion vehicles on the road transitions to being connected and software defined over the next 10 to 20 years. Now, this is where I actually agree with Goldman Sachs. So let me separate these two things. There are two ways to look at Tesla. One way to look at Tesla is to say it's, it got so much upside in FSD, so much upside in Dojo as a service, and Optimus. In fact, this is a very common belief by a lot of institutional analysts. In fact, take a look at the cover for HSBC's research report, which actually came out with a lower price target for Tesla, seeing about a 30 to 40% downside from current pricing. And they really look at Tesla's next big thing. They see autonomous cars as part of that, 14%, fully autonomous cars. The automotive division, only 39%. Humanoid robots, 12%. Dojo supercomputer, 17%. And so I wrote some things here, and I suggested we don't actually need any of this. We don't need any of that for Tesla to get to $1,000 valuation. None of that. I actually believe that the best way to price Tesla is with a margin of safety that considers Optimus as a bonus. Anything more than 10% of Tesla's total revenues for energy, a bonus. Most of the FSD revenue, aside from what we can build into vehicle margins, a bonus. Dojo supercomputer, bonus. Fully autonomous vehicle and fleet services like robotaxis, bonus. I strongly believe that the best way to value Tesla is to cut all of that out. I call that the fat. I call that the icing on the cake, the sweeteners that make Tesla an even more desirable investment. But what makes me interested in Tesla as a $1,000 price target, and over what time frame? Well, let's analyze that right now. This is my take on Tesla. A quick note, if you go to meetkevin.com, you're now going to see we've bundled every single Noobverse Pro course as a bundle into the gold membership option. Lifetime access, you get all 14 Noobverse Pro crash courses on building your wealth, being a better entrepreneur, and making money in 2024. These are brand new courses. Check those out. You'll also see the platinum and diamond options, which are phenomenal. Go to meetkevin.com to see those, or email us at staff@meetkevin.com to learn more or to bundle up or upgrade within whatever tier you're in. So this is my Tesla spreadsheet, and what I'd like to do is focus your attention here on what I call my 2026 base case scenario for Tesla. This is not the $1,000 sheet, but let's go through it. There are some important changes here from previous analysis that we've done for Tesla. I've actually reduced the average selling price of a Tesla from $45,000 to $40,000. Kathy Wood sits at about $45,000 for her target. I'm reducing this to about $40,000. I actually think it is beneficial for America and Tesla to have, and for Tesla to introduce, smaller EVs, like smaller batteries EVs, right? So a Model 3 with 99 miles of range. The vehicle's lighter, it'll be more efficient, the battery will be a fraction of the cost. A lot of people might get upset about that idea because Americans, we like our range, we like buying cars for this edge case scenario that, well, we might have to travel with it. But most households have more than one car. And I think a daily driver for your commute to school, or you're bringing your children to school or soccer practice or whatever, 99 miles is almost sufficient. I think it's more than sufficient, quite frankly. I think the average commute in America is about 30 miles a day. That's your average commute, about 30 miles. That's roughly 30 minutes as people look at that as sort of highway miles, though some people argue that, the averages skew a little bit because some people sit in traffic and they drive fewer miles, some people drive more miles, whatever. The point is, and we could Google it too, average commute in America. Average commute in America. I was close. 26.6 minutes according to the Census Bureau. That means on the daily, you spend about an hour on the road, right? So if you're about 30 miles, 60 miles, perfect. Quite frankly, 100 miles on a battery is probably like 60 anyway. No, it shouldn't be that bad. It should be, if you had a 100-mile battery, realistically, you should be getting like 85, 90 out of it, right? Take off that 10 to 15%, but that should be more than enough for your daily commute, stop at the grocery store, do things along the way or whatever. You plug it in at night. Simple. And now, this is assuming the 80% charge rule, so let's say the battery capacity is 120, right, and you're charging to 80%. I personally think that is the long-term benefit where you can actually get not just a $25,000 Tesla, but you get a $19,000 Tesla that is actually profitable. So I believe average selling prices will actually deflate down. This is inclusive of what we're seeing throughout the broader economy, whether it's Walmart, Target, Affirm, Visa, MasterCard, travel companies, you name it. Almost everybody is either talking about disinflation or deflation at this point in company earnings calls. And they are all, even Levi's, Vans, the shoes, certainly in the goods space. And everybody is talking about how can they provide more value to their customers. I think one of the best ways Tesla can provide more value to their customers is by reducing the value of, or the cost, their entry cost of their cars. So how does that play into the actual numbers? Well, I think a $40,000 average selling price at 4.4 million vehicles, which that's very simple math. It's a 35% growth rate, down from 50%, but it's simple. It's 1.8 million vehicles in 23, add 35% for 4, 5, 6. Boom. You're at about 4.3, 4.4 million vehicles, depending on if you use 35, 35 and a half, right around there. Now, what we're going to do is we are going to look at margin. I'm going to assume that by 2026, the end of 2026, we are at a 20% expense or 80% expense ratio, 20% gross profit margin on the vehicles. We're leaving most of the other items the same from our prior analyses. And this is going to bring us to a $340 forward price target for 2026. There we go. That gives us a return at today's valuation. Let's see what the stock price is at the very moment. It is $236. That gives us a compounded annual rate of return of roughly 13%. Now, that is not my $1,000 price target. I am now going to tell you about my $1,000 price target. And not only am I going to tell you about that, but I'm going to tell you about how we can actually get to $1,000 way quicker than anybody thinks. And I'm going to give you the step-by-step in terms of how Tesla can apply this and how we can get to $1,000 much quicker. Okay, ready? Here we go. First, this is the $1,000 price target. It is a 2030 price target. It is $36,000 per vehicle at 12.5 million vehicles. That is a lot of cars. A lot. So we actually have to grow and grow and grow. We don't have to grow at an average of a 35% anymore, though. We can actually bring the entire average to about 31%. So if I go 24, 5, 6, 7, 8, 9, and 30. All of them at 31%, I get to about 12. Go with about 31.5% average growth over the next 7 years, you're roughly there at 12.5 million vehicles. At a lower price range, because I think we're going to, yes, we'll have the luxury cars, but thanks to deflation, which I expect will happen, we're going to get this down. However, we are also going to get efficiencies up. I don't think we're going back to 30%. That would be a massive game changer. I'll show you this in a moment. But look at this. I think we go to 23% gross profit. Changing just those two variables with a forward peg of about 1.3 brings me to $1,000. That is a return over the next 7 years of not 13%, but 24.7%. If this margin goes higher, which I don't think it will, but this is also inclusive of FSD. So keep that in mind. My numbers are inclusive of FSD. If the expense is 30, or the profit is 30%. Okay, that's where these numbers go ridiculous. You got a $1,400 compounded annual rate of return of 30%. But I don't know if that's reasonable. So I'm going to pull that off. Now, how can we actually start getting that number sooner? There are two ways. Number one has to do with Elon, and number two has to do with advertising. Number one will not happen. I'm not concerned about this happening because it's not going to happen. I personally think Tesla needs a different CEO. And I know people get mad at me about that. You know, people are like, oh, Kevin's the Ross Gerber or whatever, just wants. I think Elon should be heavily involved with Tesla. Absolutely. A visionary for Tesla. But he's not a business face of the company. Or just stop tweeting this hate, inflammatory nonsense. Again, you should already know this. I'm just going to give you a quick bottom line. When somebody posts a video reducing hate, and then somebody replies to that video increasing hate, you have a choice. You have three choices. You can reply to the video reducing hate, or you can reply to the comment increasing hate. Elon chose to reply to the comment increasing hate. He could have replied to the comment reducing hate. Hey, we want to see more of this kind of positive messaging. Unfortunately, Elon is doing a great job at alienating business customers for Tesla. Now, I actually think the bottom's already in for that. We know he's a loose cannon in terms of his opinions. And everybody has different opinions about him. I like Elon Musk a lot. I think he's an inspiration. And I actually think he's a great leader. I think in person, he's probably fantastic. I don't think he's a great tweeter. I think he's probably fantastic in person. Very reasonable, level-headed. I like Elon a lot, and I think he's a fantastic engineer. Inspired by him, absolutely. But I have my criticisms. I don't think he is a great business executive. That said, when it comes to replacing Elon as CEO, probably not going to happen. So let's go to number two. Number two is Tesla is now advertising to try to find a campaign manager. They are promoting finding a campaign manager to run advertisements for Tesla. This is fantastic. They've also started running ads on Tesla or on YouTube. Unfortunately, they are doing some things right and some things not so great. Elon promised during the shareholder meeting when I asked him, why don't you tell people about these safety features? Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much.
In the clip that we play on this channel regularly, you see it at the end of this video. Elon promised, okay, we'll do it. We'll try it. He has fulfilled his promise. I respect him for that. Now, I have some minor criticisms for their first video. For example, hey, maybe we can get some individuals who can maybe more clearly enunciate. Maybe we can simplify the messaging a little bit more to moms or a new audience rather than tech bros, right? But that's okay. I think the advertising strategy, and this is my advice for Tesla. So I think if I'm going to criticize, I should also provide balanced support. And this is how, if Tesla does this, Tesla could actually reach the $1,000 price target within the next year. I think Tesla could reach my 2030 price target within the next 12 months. As interest rates decline, Tesla is a very interest rate sensitive sector. Bonds skyrocket. Over $5 trillion of money from money markets go into the bond and stock market. Tesla will rally. There will be a euphoric rally, and Tesla will overprice itself very quickly. It will not follow fundamentals. I think it is underpriced for too long, and it will but then be overpriced for too long. That's my belief. Now, there's no guarantee of that, obviously, but here's my advice to Tesla. It's very simple. The very first thing that a campaign manager should do for Tesla, I'm going to give you my blueprint, and I'm going to give it because I'm never going to get this job. I don't want this job. I have plenty of other stuff going on. But if I were hired as Tesla's campaign like advertising campaign manager, here's exactly what I would do. Day one, I would demand that the campaign manager be with Elon as much as possible, because we need to use Elon as the tool that he is, an ability to advertise when it is good, and somebody who can filter Elon's actions on Twitter, and somebody who can document the hard work and effort that Elon puts into these companies that he is running is what needs to be done. So document Elon's journey. Vlog Elon. Number one, the good stuff. Filter his tweets is part of number one. Number two, we need to write down the benefits of Teslas that are above and beyond that of the competition. How many multitudes safer are Teslas? How many multitudes cheaper are Teslas? What tax credits are available for Teslas in every single state? What features of Teslas do new Tesla owners not know about? What features of Teslas do new car enthusiasts or people who are interested in Teslas ask about at the dealerships? The Tesla stores, they're not really dealerships. Now we're going to take all of this data and we are going to brand our advertising around this in very clear and distinct advertising. Ideally, with a personality, like Ryan Reynolds. I'm going to give you some examples. Now, the numbers that I'm going to use, I'm going to make up because I'm coming up with these advertisements right now. I don't have a script. Everything I say is me. It's raw. Some people get mad at me for that. You know what? I'm accepting of that. I'll still have a beer with you. You'd be like, Kevin, how dare you say Elon shouldn't be CEO? The stock will go down 25% then. I see the comment. Okay. Here's exactly what needs to be done. Ads like this. Hi, I'm Ryan Reynolds. Did you know that Teslas are 7 times safer than a Toyota Corolla? The Institute for Highway Safety, whatever, cited this. Now this is exactly where I want my newborn children to be. End. Simple, okay? Safety, 1. Now, you need a mom. I bought a Tesla because I want my children to have the greatest chance of surviving a drunk driver or a distracted driver from killing or harming my children. I want them to have the best chance of survival from somebody else's mistake. That's why I trust my children's safety in me working in coordination with Tesla's self-driving technology and the fact that this car is 7 times safer than the next leading safety score. Whatever, right? Again, I'm making up the stats here just to provide an example. Mom, children, child safety, using a mom to show, using full self-driving, not so you could go text, but so you could be a partner with it. Teslas are 4x safer per mile driven, whatever. Let's do another one. Hey, did you know the lifetime ownership of a Tesla is only 15% of that of a Toyota Prius? Yeah, a Toyota Prius costs X dollars over the life of 7 years, which is the average amount of time somebody keeps a Prius. Whereas the lifetime cost of a Tesla is this. Now, sure, people suggest the batteries are expensive, but we're a car company that's been around for over 13 years, and here's how few batteries we've actually had to replace. So when we do the math, there's nothing better than a Tesla. Simple advertisements like this. And then what we're going to do is we're going to end each of these with state-targeted pricing. Did you know you can now get a Tesla Model 3 brand new for under $25,000 in the state of Colorado with both federal and state tax credits? It's that simple. Go to tesla.com to learn more. Then they look at they see your IP address when you come in, boom, here's the, Colorado, or pick your state, whatever. It's so simple. And I know Tesla is already implementing some of these things. But I'm making these videos for 2 reasons. I want to be very clear. I put my money where my mouth is. I believe that Tesla is a $1,000 stock by 2030. I also believe it will happen well before 2030. And when it does, I will rebalance in a tax-efficient manner through an actively traded ETF into other stocks. So that way I don't have to pay the government taxes. That's the way exactly I'm going to do it. And I believe that Tesla will go euphoric as interest rates come down well before 2030. Therefore, I don't have to stick around to see how margin ends up. So, with that said, I'm a massive, massive fan of Tesla. I think Elon is shooting his employees in the feet. I think a lot of the Elon damage has already been done. It's already been priced into the stock, so none of this is like horribly a surprise. I don't think we're revisiting the bottoms of 2020 at all. 2022, that is. However, I do believe strong advertising management can accelerate the sustainable future vision that Elon Musk has for Tesla. Thanks so much for watching my video. If you like my perspectives, please check out our Black Friday sales event, which is live already today. even though next Friday is Black Friday, we're starting it now and it'll expire on Black Friday. Just go to meetkevin.com to learn more.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage the ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker.